well, basically, you're going to need to put money into your account. And you're going to have steady flow into your account. And that all starts with getting a good cash flow and putting it into your account.
So step one is the and asset works well for people that have cash flow.
Mm-hmm. Yes.
Okay, so let's say you have cash flow, which you guys do. And so you have cash flow. Now it's flowing into a policy.
Yep.
Right. And what does that policy gonna do for you? What does that policy do to you?
It's just gonna grow, right?
Yeah, it's
gonna expand from there.
This is BetterWealth with Caleb Guilliams. Hey everybody, welcome back to the BetterWealth podcast. I am here with Joel Hielema and Josh Hielema, and they are here visiting from Wisconsin. And in the first episode, in the part one of this video, if you have not got a chance to look at this or listen to this on the podcast, make sure to go back and check them out. We talked about the overview. You guys also gave just a little bit of intro on who you are. Gregg, the guy that helped found BetterWealth, these are two of his kids, and they get to be a part of coming to Denver. And he tragically passed away a little year and a half ago.
Yep.
And so we are learning a lot about money, about values, about a lot of life things, and I've learned more by you guys being here than I probably taught you as it relates to money. But one of the things that we're going to do, and we're not going to get into details, but we spent a good over an hour earlier today talking about, the flow of money, how the and asset works. In part one, we talked about the flow of money. It's having clarity on who you are. It's being efficient with your cash flow. It's being consistent with long-term and short-term. And then it's also using your money to create value. But now we're going to talk about the and asset. And this is really cool because I'm going to do my best to let you guys kind of explain the big picture. And then I know that you guys have questions. And I just want this time to be where you guys can ask any questions that are unanswered. I know we showed the numbers. We're not going to talk about that on this show, but I just want people to get a big picture of you guys know quite a bit, and you already have an amazing account that's going to serve you the rest of your life. So, any thoughts before we jump in?
No.
All right. So, big picture. If I took a step back and someone was to come to you and say, "Okay, explain to me how the and asset works and how your plan works." Big picture, how would you go about explaining it?
Like what do you mean?
So, well, basically, you're going to need to put money into your account. And you're going to have steady flow into your account. And that all starts with getting a good cash flow and putting it into your account.
So step one is the and asset works well for people that have cash flow.
Mm-hmm. Yes.
Okay, so let's say you have cash flow, which you guys do. And so you have cash flow. Now it's flowing into a policy.
Yep.
Right. And what does that policy gonna do for you? What does that policy do to you?
It's just gonna grow, right?
Yeah, it's
gonna expand from there.
What word do we use? It starts with a C.
Compound.
Okay, it's gonna compound. Does it compound until retirement and then stop? Does it compound?
It compounds till your death. Right?
Till your death. Okay, and then what happens when you pass away?
All the money gets transferred, plus your death benefit to your kids.
Right. And the one caveat there is, yes, your net death benefit, which grows every year because your cash value grows, gets passed on to the next generation. So step number one is you need cash flow.
Mm-hmm.
Step number two is you put it in a place. This is an and asset, a special type of whole life insurance contract where your money is not just going to grow till retirement, but going to grow to the day that you die. But then when that happens, you're going to have an even greater monies getting passed down to your future children, to the next generation. Okay, so it's gonna grow. Now, if that was all it did, it would be like a regular investment, and we would compare it to other investment vehicles. What makes the and asset so special?
Is because it's what you can do with that money in the account, and there's three things you can probably do with it. There's probably more, but it's what you can do with that money when it's in the account. You can take it out in some investment loans from it, and yeah.
Yeah. So essentially, the third area is how we use our money, and there's two ways that you can get your money. You can take it out, but if you take it out, you can't put it back in, and your money no longer grows for you.
Mm-hmm.
So the way that we like to use our money is we like to borrow against our our cash value, which
Mhm.
kind of sounds scary, but we both know that your money's continuing to grow.
Mhm.
And then you get to use the insurance company's money to invest in things. Now, and if you haven't watched part 1, make sure to go back and watch part 1 of this video. But one of the things that we talked about is one of the things that you guys should invest in is your skills.
Mhm.
We talked about the example is if you're making $1,000 a month, it's $12,000 a year. If you can invest a little bit of money in your skills and drive, instead of making $12,000 a year, make $18,000 a year, that's an investment.
Mhm.
And so that's an example of what you could use your and asset for. Your money's growing. You could, borrow against your cash value to invest in skill sets. And now you have a better skill that's going to make you more money. Your cash is growing, and then you can pay back that loan over time. And it far outweighs what you paid for it because that activity gets you greater rate of return. So let's break that down even simpler. Josh, let's say you could get an investment that earns you 2%. Would you want to pay 5% to the insurance company to make 2? No, you would lose money. You'd be paying 5 to bringing in 2. That would not be a good deal.
Yep.
Now, if you could make 10% in an investment, and if you realize that you could deploy capital and earn 10%, would you pay 5% to the insurance company to make 10?
Yes.
And I don't expect you to know this, but do you know what rate of return you would get in that scenario?
No. Would that be?
Oh, that's 100% rate of return. Because you took $5 and you made $10. So you made 100% on your money. You put $5 in, you got $5 back.
Right. Makes sense.
And so what we want to do is we want to make sure whatever you use your cash, however you borrow against your money, you want to make sure that the activities, you get a greater rate of return for that. So whether it's an investment, whether it's a skill, or whether it's investing in people and relationships, you want to make sure that gives you a lot more value in the long run. It doesn't necessarily have to be in the short term, but the long run, because that loan needs to be paid back.
Mhm.
Okay, so now let's kind of role play here. So you guys are getting it. You guys have it's funded originally from your dad.
Mhm.
And now what's going to happen is there's going to get to a point where you guys are going to start saving into it. Now, we talked about having a separate bank account.
Mhm.
You have a checking account and you have a savings account.
Yep.
What you're going to start doing is because you're tracking your money, you're going to start saving it into your savings account.
Mhm.
Okay? Each year, you're going to have the ability to deploy some of that savings, put it into your and asset.
Mhm.
What happens when that money's in your and asset? What's it going to do the rest of your life?
It will grow. It will compound and keep going up.
And what kind of things will you be able to do for the rest of your life if you have opportunities?
Well, you can invest and
Yes.
you can get good cash flow.
So I'm putting you guys on the spot here. What kind of things are you looking at, using your money on? If you just think big picture, like what are some areas that you might use your money for the next 5 years?
Well, to put it again, to invest in your skills.
Yes. So what kind of things may interest you? And you don't, obviously we need to do our homework and see.
Right.
Do anything come to mind?
Not really, no.
What about you?
Not much. No.
Okay. Well, we're going to make sure to continue this. And that's what I want to just also say is mentorship is so important. You want to just really surround yourself with people that can invest in you and can help you. But at its basic form, cash flow coming in, you want your money to grow the rest of your life. But then you also can use that capital to invest in, number one, yourself and in activities that really create the most value. And the really cool thing is, if we understand the part 1 of this video of how we should think about our money, and then we create an and asset where we get our money to do a lot of different things, it's going to be amazing. Now, do you guys have any questions for me before we end? Like, I know that you had questions about how these things work, and I'm here to answer any questions.
Yeah, one of them was about the compound. Like, how did you get to that compound point? Like, how do you start investing into a compound growth spot, like into an and asset?
Yeah, so that's a great question. One of the questions that Joel asked earlier is, how do you even set up an and asset?
Mhm.
And you have to get it set up at a special type of insurance company that sets up overfunded whole life contracts. And what you do is you get an application and you fill it out and you get approved. And since you guys were so young, you guys didn't even need to do a medical test. You guys got approved for this plan, and then we designed the plan for you. So you have to work with someone like us who has a relationship with these companies that can design an and asset for you. But once it's set up, that money goes to the insurance company, and that's how your money compounds the rest of your life and you can continue to utilize that capital.
Right.
It's a great question.
Mhm.
What other questions do you guys have?
I don't think I have any more. I think you answered them all.
Yeah.
And I also just want to say this, in have conversations about money with your family. Have conversations with money, period, because it just elevates the game. And one of the things that we're going to do is we are going to meet consistently. I'm going to continue to challenge you guys about value. I'm going to continue to challenge you to be consistent. And I'm going to continue to challenge you guys to continue to reading books, because those are all things that you can do that can make you more successful. So again, thank you so much for supporting BetterWealth. We appreciate you. You can check out more about my book, about content that we're talking about. We have an assessment that answers the question, how much money you should be saving. And you can go check us out at betterwealth.com. That's betterwealth.com. And if you have any questions for Josh or Joel, make sure to email me at caleb@betterwealth.com. And I will make sure that those questions get passed on to you guys. You guys rock. Now, who's going to win an ultimate?
I don't know.
Joel beat me in ping pong, but it was left-handed, so that still doesn't count against the show, and we went into overtime. But we have a lot of fun around here. Take care, be well, make sure to live an intentional life. Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.